Welcome to my weekly market roundup, 3rd October 2020. I am Sagan Nandi. I used to work in IT. I have retired now. I am swing trading stocks using the Q trading systems and techniques. This is my email ID tradingprofitably@gmail.com, my traders forum sagannandi.com, YouTube channel Trading Profitably, and Twitter handle Sagan Nandi. I regularly share live market and stock analysis through these channels. They are open to the public and you are most welcome to make use of them. Let me check. Are you able to hear me and see my screen? Please let me know using the YouTube live chat panel. I'll continue. Disclaimer. Thank you, Mike. This demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I have not prepared for this session. Together we will look at oil and gold, these two commodities, and then at the market, sectors, industries, and stocks. As usual, I will use Q Elite and Q Global for technical analysis, Q Vital for fundamental analysis, Q Edge for sector industry rotation analysis, and Q Index for market level index analysis. That was the last slide of my presentation. I'll continue with live system. Let me start with recapping what happened in the past few weeks. 2 weeks ago, the market had gone up for the week. However, on that Friday, the market tilted down. Then following week, market fell down. However, that Friday, that is the previous Friday, here this was previous Friday, the week was down. However, the Friday was up. Looking at that, I mentioned that if the prior week's pattern continued, that is the Friday's momentum continued for the next week, then this week would end up being bullish. That happened this week. This week ended up being bullish. How was Friday? We'll find that out. Therefore, looking back, the analysis that I made, that it was possible, not guaranteed, but possible or probable that the market would recover this week, that came true. That was my hypothesis also because the market was oversold and several instruments, either the market ETFs or the leading stocks, were at possible bounce points. Now we have to decide based on today's analysis what we expect the market to do next week. We'll do that. The other thing that I want to do this week is look at several market breadth parameters other than what I was doing already. I will share that along the way. Let's start with the global markets, starting with the Australian market AXJO. I am looking at the global markets using Q Global running on MetaStock. AXJO Australian index was moving inside a range and that is continuing. It is inside triangle as well between support and resistance memories. In the weekly, there is a resistance trend line and price is rolling over from there. If the support trend line in the daily is broken, then it may be time to look for shorting opportunities in the Australian market. The weekly is looking bearish. What we observed in the last Wednesday session is that the global markets were sideways and starting to show some bearish pattern. And this AXJO chart confirms that hypothesis that global markets, at least as far as AXJO is concerned, was sideways and starting to roll over. What about Japanese market, Topix index? Here also the trend line support is broken in the weekly. Daily is still in an uptrend. It has higher highs and higher lows. However, the weekly has broken trend line support. Therefore, we are not going to look for long opportunities right now. We will not look for shorts also. If the price could go up little bit and come down again, that would give low risk shorting opportunity. The weekly is bearish, daily is bullish, mixed picture. Chinese market, CSI 300 index. This was moving inside a range. It is still inside that range at the lower end of that range. The weekly is bearish for several weeks now. In the last session, I mentioned that even if daily came down and gave bearish flow candle, that would bring price too close to the lower boundary and also too close to the ascending trend line. Therefore, even if we had a bearish flow candle in daily, that would not give us a shorting opportunity. And there is a trend line resistance nearby, therefore there is no easy buying opportunity as well. It is range bound. India market, Nifty 50 index. In the last two webinars, I mentioned that if price can come down, then I am not going to short immediately. I was going to wait for price to go up and then come down. It has done exactly that. Price initially came down. There is trend line resistance in weekly and daily both. And then I waited for price to go up. It has gone up. It is near the trend line resistance. This is the optimal point to look for shorting opportunity if the daily can turn down. The weekly is now neutral color, yellow color. If the daily gives bearish flow candle, not sure if the weekly will turn magenta immediately. If weekly turns magenta, that will give a go flow trend following shorting opportunity. If the weekly does not turn magenta when the daily gives magenta candle, then you may consider taking a short trade in underlying stocks, weak fundamental stocks, instead of trying to short the Nifty itself. The underlying stocks may give Q trade setups if the Nifty rolls over from here. Right now it is near the trend line resistance, we cannot buy, and it is significantly above the recent low. That is another reason we cannot buy. We would rather short than try to buy it now. Of course, the short signal has to come. The last global market that we study is UK market, FTSE index. It was moving sideways but gradually coming down. The gradual coming down was clearer from the weekly chart. That pattern is continuing. Daily has trend line support. and trendline resistance, there is no easy trading opportunity right now. All the global markets are continuing to be range bound or rolling over. This week probably more range bound than rolling over. It's range bound, back to range bound again. Now let's look at the commodities. Let's look at the gold ETF GLD. The last video I mentioned that gold was inside a range. The weekly is now bearish color, daily is bullish color. Daily has recovered somewhat from the lower boundary level. If it could go to the trendline resistance in daily and come down from there, that may give a trend following shorting opportunity. Right now there is no trade setup in gold. Looking at the weekly, I would rather look for shorting opportunity than buying opportunity right now. That will change if the daily can break out of the trendline resistance. Oil ETF USO moving in very narrow range. We may expand the scale little bit. Still it is moving inside a range. The daily has trendline resistance and trendline support. On Friday it broke below trendline support. If at all there may be a thought of taking short trades, however it is too close to lower boundary. The weekly is bearish, however daily is too close to the lower boundary to take a short trade right now. And as we are studying QH sector rotation every week, every day, if you are using Q systems, we know the energy sector stocks were weak for so long that it may be difficult to short them now. They are already very much at a lower price point. Not the best time to short. I would rather short at a higher price point. Oil itself is not showing any bullishness as of now. Friday it broke below trend line support with bearish pressure. Certainly no bullishness. Now let me look at some of the market breadth charts. Earlier I used to use TradeStation for analyzing market breadth. For TradeStation Q Elite I still use the intraday market breadth for fine-tuning chart, for fine-tuning trades, not for charts. For precise entry of swing trades or for day trades, I use the intraday market breadth, but the weekly market breadth that I used to use on Q Elite on TradeStation, that is not there anymore. Why? Because TradeStation stopped providing data for the NYSE. It is still providing data for NASDAQ, but not for NYSE, and that is like a half full glass of not much use, at least for me. Therefore, I relied on the extremely reliable data source, that is Reuters. Refinitiv. It took some work, but now I have the NASDAQ and NYSE market breadth chart on Q Global. The new high-low, advanced decline and up-down volume for both NASDAQ Composite Index and NYSE Composite Index. Let's study this now. One thing to remember, this chart, the market breadth chart and few other charts on commitment of traders that I will share after this, they provide background information. I tweeted about that they provide background information, but they don't give precise trade entry signal the way the Q trade checklists or Q trade setups do. So this is useful information, but they don't tell us exactly when to take a trade or even when to exit a trade, but still useful information, especially if you keep on looking at it week after week. Remember, when I am studying the market structure, the higher I go up in the market structure, market level, then sector, then at the top is market, then sector, then industry, then fundamental technical together, stock level at the bottom. The higher up I go, I use longer interval. So for market level, I use fixed weekly interval. For sector industry, I may use moving 5 days. And for stocks, I use daily charts. For precise entry or day trading, I use 5 or 10 minutes. This is the market structure study at the highest level, market level. Therefore, I don't use daily interval for this. That will give too much of noise. I just study it weekly. What can we see? The new high low is saying that though price made new high in Nasdaq, new high low is muted. Advanced decline, on the other hand, is quite strong. If at all, in recent period, the lower levels are becoming shallower. The low points are becoming shallower for Nasdaq advanced decline. The peaks are becoming higher. That means though stocks are not many stocks are not as many stocks as before are making new highs, overall the Nasdaq market is still pretty strong. And the up down volume shows the same picture. Since the low in March, price has recovered, and that has recovered with excellent volume. Up down volume is pretty bullish. And that is bullish in spite of the backdrop color changing to magenta for 4 weeks, which shows that some of the weakness in the last 4 weeks may be because of the leading stocks coming down. The broad Nasdaq market seems to be quite strong. That is what we can try to read from this chart, Nasdaq chart. NYSE, what does it show? Again, the new high low is very muted. Of course, here broad NYSE market didn't make a new high. This is different from the S&P 500 index. This is the NYSE composite index. So Nasdaq 100 made new all-time high. Nasdaq composite also made new all-time high. SPY made new all-time high. However, NYSE composite didn't make new all-time high. That is showing that though QQQ SPY made new all-time highs 1 month ago, under the hood there was quite clear weakness in non-technology stock. In Nasdaq, it was very strong, but in non-tech stocks in NYSE Composite Index, the weakness is clear. And in last few weeks, it is coming down. If you look at the up-down volume, that is also much weaker compared to the up-down volume of Nasdaq. To some extent, you may say the same thing is true for advanced decline also. Here, the troughs are becoming deeper, unlike Nasdaq, where the troughs are becoming higher. That clearly shows the weakness in NYSE relative to Nasdaq. And both are having bearish backdrop color now. If we look at the current week, then some interesting thing we can observe. The weekly chart of Nasdaq Composite, the last week's candle is actually more bearish than the last week's composite, NYSE Composite. So this week, NYSE as a whole did better. Again, that may be because of some leading stocks weakness, because we can see the overall up-down volume did pretty well. This is a chart I will continue to use in every market roundup now that I have it available again both for NASDAQ and NYSE. In the middle I stopped because TradeStation stopped providing data for NYSE, but now I have the ability to look at this. Again, this provides background information similar to the commitment of traders. Again, I am relying on the definitive data. Give it a few seconds. What is it showing? It is showing the NASDAQ E-mini futures, commercial position and non-commercial trader positions. All large traders are required to report their positions. It is a bit delayed position, not up to date. They report on Wednesday and that is published on Friday. It is a delayed report. And the reason for buying or selling is not known. We also don't know whether they are trading other related instruments. Related instruments could be SPY, it could be the big futures like S&P 500 futures instead of E-mini futures, or it could be options. There could be many other ways that the big traders can trade in and out of positions. So we don't know exactly why they are doing what they are doing, and we don't have the entire picture. Keeping that in mind, we can look at the commercial positions. What is meant by commercial? Meaning people who are using NASDAQ E-mini futures more for hedging, not for speculating. For example, pension funds, institutional funds or sovereign funds. They are not interested to move in and out of positions as speculation, but once they have large position, maybe in many stocks, if they think the market may come down, or there may be many reasons, they don't disclose the reasons, and I don't want to speculate on what reason. Only thing we know that sometimes they may want to hedge their existing positions, and they do that by shorting the futures. That is the commercial position, and non-commercials include traders like us as well as the large hedge funds. Retail traders don't have much volume, therefore we may assume the non-commercial part are speculators, large speculators. The cyan color is hedgers and magenta color is speculators. And you may see the picture is somewhat like a mirror image. What we can see in recent period, this is a weekly chart again. At the market level, I like to look only at weekly picture. It is showing that the hedgers are increasing their position on Nasdaq E-mini futures, whereas speculators, hedge funds are bearish. And the white histogram line that shows the difference, and the difference is showing it is actually going up, still negative but going up. And you will see this picture. We will sometimes see that both hedgers and speculators are in the same direction, but often they will be in opposite directions. Sometimes hedgers may win, sometimes speculators may win. It is not definitive. We cannot say that hedgers are bullish now, therefore I should go bullish. Sometimes speculators will win, sometimes hedgers will win. Right now, the hedgers are increasing their long positions and speculators are shorting. Now this picture is for Nasdaq, and you will see the picture for S&P 500 is very different. It is going to load all the data. It does a number of calculations, getting the data from Refinitiv and going to load it in a few seconds. This is for S&P E-mini futures. For Nasdaq E-mini, we saw that hedgers are increasing their bullish position. Here, hedgers are reducing their position and speculators are increasing. So speculators are bearish Nasdaq and relatively bullish S&P 500. That is probably what we saw from the current week, the last week that just passed. That week is also showing, if we look at the Q charts, weekly charts for Nasdaq Composite Index and NYSE Composite Index, Nasdaq Composite Index is a little bit more bearish now this week. This is what we can read from the commitment of traders. You may see there are some times when one party or the other will not get it wrong. For example, here hedgers were bullish but speculators were bearish, but speculators got it wrong. Now, did they get it really wrong? We don't know, because we don't know what other adjustments they are making using ETFs, using options, using the big S&P 500 futures options, etc. That is why it is not conclusive, but it is something we may just look at as a background information, just like the market breadth I shared. At minimum, it is telling us that large traders, whether hedgers or speculators, they are having opposite opinions about Nasdaq and S&P. Totally opposite. Whether you consider commercial positions or non-commercial positions, both for Nasdaq and S&P 500, they are having opposite view. That is the background information. Now let's look at the, what should we look at first? Let's look at the few slides I created from QEdge. This is sector to sector comparison that I share every week. This picture is from 1 week ago. I shared it in last weekly market roundup. The red bars represent current week's performance, green bar previous week's performance. 1 week ago it was bearish. All the red bars, most of them other than utilities, all the red bars other than utilities were to the left of the zero line. Therefore it was bearish. However, that Friday was bullish. Looking at that, I hypothesized that maybe previous week's pattern would continue and this week would turn into a bullish week. Did it do that? We have to see that this is from 1 week ago. That time from bullish it turned to bearish, but that Friday was bullish again. And based on that, my hypothesis was this week may be bullish, and that turned out to be true. This is the current week's picture. Other than energy, all the red bars are to the right of the zero line. Therefore, this week the sector level is very bullish, as I anticipated. Later on, we'll look at how Friday is. Later on means next slide. This week, on Friday, market didn't reverse. On Friday, most of the sectors, 8 of the 11 sectors, continued to go up. Communication services, healthcare, and infotech. They have many high growth stocks, especially healthcare and infotech. They came down, but overall, this Friday was bullish. The week was bullish and Friday was also bullish. Financials became the best performer on Friday. Financials has a lot of weak stocks at rock bottom prices. Energy certainly has that. Looking at the USO chart, I am not going to look for buying opportunities in energy now. In financials, if we get good buy setup, that may be interesting. Real estate is one sector where I already looked at certain stocks, possible buying opportunities, and I shared that in previous videos. That was one stock that I shared was Unit Corp. Let's look at Unit Corp. The ticker symbol was UNIT. Let's look at using QLE so that I can look at the historical memory charts. In the daily, I'm using the hotkey to change the chart so that I can see the past memory chart, memory trend lines. When the weekly was at this point, when the candle was still magenta, at that time I started talking about unit COP, expecting it to hold, the yellow direction line to hold in weekly and expecting price to go up from there. I first talked about unit COP on this day and noticed that price could not break above the trendline resistance. Q traders would wait, and that opportunity came few days later on this day when price closed above the trendline resistance. That was a breakout setup. Because I started talking about it 3 days ago, one could be ready and buy the stock right at this point. Another way to buy could be using fine-tune chart to try to catch the very low of this candle when price didn't touch but came very close to the trendline support. We can see the support held multiple times. Looking at that, one could be ready and try to buy it at the lower end of this candle. That would be a buying at support kind of trade, which would also coincide buying the stock at the very low of this weekly candle at the yellow direction line support. That would be a support buy, or one could buy at the breakout on this day. And because we already analyzed it 3 days ago, one could be ready and pull the trigger just at the point of the breakout or at the point of the support. When I shared it, I also mentioned that even if it breaks out of this trendline resistance, there would be another trendline resistance. However, I still mentioned it as a possible buying opportunity, looking at the fundamental, technical, and the fact that the sector, real estate sector, was turning around. This time it broke above the second trendline resistance also quite easily. Therefore, whether you bought it as a breakout setup or you bought it as a support buy at support kind of trade, you already have more than risk amount as profit and you could book at least partial profit by Friday. It is above the trend line resistance now. Therefore, there may not be any need to close the full position. If you bought the stock using Q guideline, you might book partial profit and continue to hold partial position with trailing stop. This is again another illustration where I analyze the stock beforehand using the Q360 degrees technique, and I point out the points of entry, the regions of entry, and also the possible resistances nearby. Using the 360 degrees technique and the tailwind from the sector industry, you could buy and make considerable profit in this stock while several other stocks struggle. And this is a real estate sector stock, not a high growth stock, but in Q technique, whether it is high growth or non-high growth stock, you are still able to make significant profit. About profit, this month ended, and as I mentioned, I may stop trading on the Schwab account. The platform is nearly not as good as I would like it to have, but this month I completed about 7 months of trading on the Schwab account. I started it with $33,000. Their minimum balance was $30,000 when I opened it, and to keep some buffer I added $3,000. This month, what happened to this month? Let's look at SPY. This month meaning September. In the beginning of September, the market made a new all-time high. Yeah, That was beginning of September. And after that, 1 week, 2 week, 3 week, 4 weeks. It fell for 4 weeks. You can see from the activity bar, all the 4 weekly bars were in red color. And then for one day, probably the last day or 1 or 2 days at the end of the month, it recovered somewhat. It was a sharp down move if you look at the daily chart. Still, instead of losing money, it's a real money account, a model account I was using. I was waiting for Thinkorswim to be ready, not yet ready, so I was using the Schwab platform. It still ended with almost 9% profit. I think that was quite good, at least for my expectation, that was quite good. And the month once again ended positive. It's continuing to go up. This is the monthly performance. And if I look at YTD performance year to date, this account trading mostly stocks or stock equivalents is up by 60.9%. And for me at least, it is very important to keep the equity curve steadily going up. Started the account in the middle of February 2020. Since then, market has gone through sharp down moves, very sharp down moves, isn't it? If we look at the SPY chart, after I opened the account, the market went through a very sharp down move and then recovered. There was some sideways move and again it went up and came down again. So I had several pretty volatile movements in the market in the last 7 months. But one thing I could manage is to keep the equity curve steadily going up. There were certainly losing trades, but the drawdowns were never much, and overall it is trending up. This is the 7 month ending from February till September. I may stop trading this account. Schwab account is not very friendly, especially when I am requiring to hedge some of my positions using options or just buy market level ETF options for hedging my positions. It is very inconvenient to do that using Schwab. But in any case, as I promised, I wanted to share this month's data also before ending. So this is my data. And I could manage that by trading stocks like Unit Corp and other stocks that I am sharing regularly on my Twitter page and also in the Traders Forum. Now let's look at the USA market. We have SPY here already. The weekly backdrop color is remaining magenta, though price closed higher. We can see that from the activity bar. The candle shape is very indecisive. When daily was at this price point, that time I mentioned that I was looking for buying stocks, not shorting. And when it went up, I mentioned that it already went up, therefore the lowest risk buying opportunities are not there anymore. I started to look for shorts, but that has not come yet. If the daily turns magenta, weekly is already bearish. If the daily turns magenta, that may give a trend following shorting opportunity. Because I prefer to trade individual stocks, I may not short SPY, but I may look for shorting opportunities in individual stocks. Right now the weekly is bearish, therefore I am not going to look for buying opportunities, at least not looking at the market level. DIA, very similar picture. The weekly is bearish, daily recovered from the lows. There is no low risk buy point anymore. If the daily turns magenta, that may give a shorting opportunity. Russell 2000 ETF IWM. This is one ETF where the weekly is not bearish, it is neutral, yellow. However, there is a trendline resistance in the weekly and even closer trendline resistance in daily. This is in a perfect place to look for a shorting opportunity using intraday fine-tune chart next week. Especially if price can go above the daily trend line and then reverses right at the point of reversal using fine-tune chart, I could look for a shorting opportunity. And of course, I could do that if at the time of entry IWM is the weaker of the market ETFs. That will give the best and lowest risk shorting opportunity in IWM. And Nasdaq ETF, here the weekly is bearish and the daily has turned bearish. Therefore, technically you may think of QQQ giving a kind of go with flow short trade setup. However, I don't like to trade the ETF QQQ for shorting. I would rather look for weak fundamental stocks, technology stocks probably to short. We can see that Friday's candle shape is also bearish, came down with bearish pressure, high volume, bear release. So we may look for shorting opportunities in tech stocks next week, especially if QQQ could open higher and then it starts to come down. Now we saw the market breadth charts earlier, Nasdaq charts and NYSE composite indices and their internals. We saw that though QQQ came down, the advanced decline was not so weak. Therefore, the weakness may be related to mega cap stocks. That also is one thing that we may keep in mind. There may not be, when you look at the stock level, there may not be so many attractive shorting opportunities other than mega caps. And mega caps are, of course, risky to short. If we look at the mega caps, on Friday, all of them were weak. And Tesla was the worst performer, came down by 7.3%. That momentum may or may not continue. Probably there is no Q trade setup in any of the mega caps. Let's look at Tesla. Though the weekly and daily both are bearish in color, there is a trendline support nearby. That's why we are not going to short now. By the way, if I change the daily chart to see the historical trend lines, remember when price came here, I mentioned there could be a buying opportunity which would be exited at the trendline resistance. In fact, I mentioned about both those points at the buying point and also exit points. I mentioned that Q traders would book at least partial profit when it came to the memory resistance. After it went up little bit but came down again. Now it is looking weak. Weekly and daily shapes and colors both are weak. However, because of the trend line support, there is no low risk shorting opportunity now. Let me change the template back to the full entry chart template. Tesla also came down with heavy bearish pressure. And if we look at Google, which also came down on Friday, but by the smallest amount of the mega stocks, mega cap stocks, the weekly is bearish, daily came down, however indecisive candle in shape and color, and also even if it turns magenta next week, there is a trend line support. What it is showing is that if the market comes down little bit and if all these or some of these mega cap stocks starts to hit support, that may be the time to book profit in short term short positions, because it is more likely to reverse at least somewhat, because at least several of the mega caps are near trendline support. If we see Amazon, again weekly bearish, daily bearish, but if it comes down little bit, most likely the support will hold at least for a while. Apple has supports even closer by in the daily chart. So all the mega caps we saw have support. Some like Apple has support very close by, and Google, Tesla a little bit far away. Therefore, if I have some short positions, which I may have, I will book profit if I see these mega caps are hitting their respective support. Am I going to look for buying opportunities now? No, because none of the market ETFs are giving buy setups. They are already off their lows. If anything, I will look for shorting opportunities. But at least the mega caps are not giving any shorting opportunity now. Now, let's look at the Q edge graph and then Q finder graphs. Q edge graph along with the sectors turned bullish as I anticipated in the last market roundup. Now the 5 days picture running 5 days, sectors 91% up, industries 92% up, stocks 84% up. Very bullish week, and Friday was also a bullish day. Friday was an interesting day. Initially market dropped, however it recovered, and the recovery was obvious from these at that time real-time pie charts, and the recovery was also obvious from the multiple ETF market watch charts that I have set up using Q fine-tune charts. IWM was the strongest. It recovered fastest on Friday, and you can see Nasdaq could not recover much, and that could be because the mega caps were weak, technology stocks. SPY was also relatively weaker. Now, though IWM recovered significantly, all of them ended in the negative. As we saw, IWM weekly is neutral now. However, the daily is near trendline resistance. Therefore, next week if the market starts to go down, it is not unlikely that IWM will again turn out to be the weakest. In several past months, whenever IWM has become the strongest, that has become pretty short-lived. Very soon after being the strongest of the market ETFs, it again rolled over and became the weakest. Therefore, we may expect that same pattern to continue. May or may not happen, but we may expect that to continue. And if that gives us a low risk shorting opportunity at a trendline resistance in either weekly or daily, we may consider taking that, entering using fine-tune chart. What about the finder picture? The weekly finder along with the sector and the Q edge graphs became pretty bullish. 85% of all signals, 96% of strength signals, 83% of trend continuation, and 72% of trend reversal signals are now bullish in the weekly interval. That shows the balance between bears and bulls across all the Q signals. And we saw Friday was also bullish in terms of sectors. And if we look at Finder daily, that is last day's chart, it was still overall you can see 64% bullish. In terms of strength, it was bearish. Why? Because on Friday, because of news flows, market gap down. That gave rise to this large bearish percentage in strength signals. However, market recovered. That is shown in the 85% reversal signals being bullish, and trend continuation also remained bullish, 67% overall, 64% signals were bullish. Therefore, the sector level, market level, finder level, everything is bullish, however not at a point that is giving low risk buying opportunity. It is already off the lows, and last weekend I mentioned about buying stocks. That was the optimal time to buy stocks probably. What is my market view now? Market view is, I cannot say it is bearish. Market, several aspects of it is bullish. However, it is already off the lows. Therefore, I'm not going to look for bullish trades. So the market sector finder ETFs, everything is looking bullish, not so bearish. However, looking at the market being off the lows and possibility of rolling over in mega cap stocks, I may look for shorting opportunities more now. The low risk buying opportunities may not be there unless price can again start to go up strongly. But I will prefer to look for bearish stocks, bearish trades, and that was my view in the Wednesday's live session also. Of course, that didn't materialize. The market ETFs didn't turn bearish except QQQ, and that also happened only on Friday. If that bearishness continues next week, I may get some shorting opportunities. That is the study about the market. And this week I shared some additional charts on market breadth and commitment of traders. Let me also share some enhancements I am making to the Q systems. You already know that using Q Vital or the universe of stocks we have in Q Vital, we may carry out a fundamental analysis. I have done that for this list of stocks just now, 2411 all liquid stocks. We could look for the best fundamental stocks, bullish, or the worst fundamental stocks, bearish. If I'm looking for shorting opportunities next week, I may look for the star shorting candidates in terms of fundamentals, that is, stocks which are both overvalued and with negative earnings growth. Now I could open them with charts, and now I can also, this is not released yet, but I can also, let's say, highlight all the stocks that went down on Friday by more than 4% and try to look up their technical signals from QFinder, assuming I have already run QFinder. Of course, I could open the charts one by one, that I may still do using the chart action button to open on Q Global, or using the grid action button to transfer them to radar in Q Elite on TradeStation. But now I am also able to look up the stocks and read their signals, not only today, not only yesterday, not only this week, but even previous week's signals from QFinder, provided I have run QFinder. Now this is the universe of stocks I'm using, that is my usual trading universe, and I ran my fundamental analysis on all the liquid stocks. My QFinder also I run on the same liquid stock universe. Therefore, I'm expecting that these stocks to be in QFinder as well, unless some data reason some stock was omitted by Q Global. But if I look these stocks up, these are very bearish fundamental stocks, both in terms of valuation, both in terms of earnings growth. They went down significantly on Friday, and I am trying to get ready with some shorting opportunities, and I'm going to read out their technical symbols first. I click the look up the finder button and see all these stocks came up. Now I may sort it by number of signals coming on Friday, that is this column, last trading day. I can see there are several stocks giving go with flow, bearish setup, some gap, some pressure, and now I may look them up using Q charts. First one is Eventbrite. What it is saying, it is at price extreme middle. It came down. Why it came down? That is shown from the red color, and this is also the bearish tab. It came down with bearish pressure, had a gap down open on Friday, had a bearish flow on Friday, and there is no green or blue signal. There is a gray color signal. There was a reversal 7 days ago. The number 7 is showing there was a reversal candle 7 days ago. This is EP. We already saw its fundamentals were very weak. If we look at the next stock, Bloom Energy, and I know some of the high growth stocks might be looking to buy this stock earlier, and there might be valid reason for that. Certainly, the high growth stocks tend to go up a lot. However, on Friday, I have not looked at the chart. I didn't prepare for it, but it seems on Friday it declined heavily, though the market recovered. Other than mega cap stocks, market recovered, but this stock was still down by more than 7.5%. It had a gap down open at price level, neither extreme high nor extreme low, had a bearish flow on Friday. And the green cells are saying it touched a memory resistance and bounced from that trendline resistance one day ago, Thursday. Also had a possible box sideways market setup on Thursday. So Thursday it touched memory resistance, came down from there, had a bear release signal. On Friday it had a bearish flow and gap down move. When we read the stocks using Q Finder in this way, as you can see, we can read not only the signals for the current day, but also yesterday or the week, the blue color or the gray colors, 1 week ago or even long time in the past. Of course, looking at long time in the past, dark gray is not useful. I usually look at only the daily signals and also yesterday's signal and the current week signal. Looking at these two stocks side by side, the way I read it, Bloom Energy looks technically weaker. Now I may open it up, and before opening I close the existing charts on MetaStock. Let me open Bloom Energy using Q Global. See how beautifully we could read the chart even before opening the chart. It came to trendline resistance, bounced down from there, had a bear release signal, came to watermark resistance, reversed from there with heavy activity that could be taken as a sideways market box short trade setup on Thursday itself, and on Friday it had a gap down open with bearish flow. Looking at that now, even though other traders might be thinking of buying the stock, not sure why though, because as far as Q signals are concerned, fundamentals are pretty weak, and technically there was a short setup on Thursday itself. On Friday it dropped significantly. Friday it came in the middle of the range, therefore Friday I am not going to take a short trade. On Thursday if I took a short trade, I could even book partial profit on Friday. The next support is halfway, another equal distance away from Thursday's close. That is one, I think, very useful and fun also. For me these tools are great fun, to be able to look up the entire signal history from Q Finder for a number of stocks and then look at their charts. So if I look again Sunrun, I am seeing a number of, in fact this one also, Azul. They have multiple signals, not only the magenta color that is Friday signal but also blue signal. So I could open both of them, Azul and Sunrun. Azul very much at a lower price point, not at a shorting point, and Sunrun is at a very high price point. It had a bear release signal with heavy bearish pressure, but there is no short trade setup. That is one enhancement I am doing. The other thing, there are a few other things that I am also taking care of. For example, of all the stocks that I analyzed using Q Vital or Q Universe. Suppose I wanted to look at the stocks that went down with heavy bearish pressure. You remember the inside category? I click the red button and I see large number of stocks went down with heavy bearish pressure. Which industries? I can see that. Oil and gas, I am not interested. Oil is at a very low price point. So let me look at the asset management, apparel, biotech can go up, go down suddenly. Let me avoid that. Let me choose these 4 industries. Now, earlier I used to look at the industries one by one. Now see what I did. I highlighted the 4 stocks. Now I have many navigation alternatives. I could look at those stocks using Q Finder. Those stocks, if they are available in Q Finder, they will show up with their signals. Or I could open them using Q charts. I'm opening them using Q Global, or I could use Q Elite on TradeStation also. The third alternative now, I could check out their industries first, and I don't have to do it one by one. If I click the gear icon, it will look up all the 4 industries together. All the 4 industries. And what it is telling me that if I'm looking for shorts, I may look for shorts only in interactive media and services because the other industries are relatively stronger. Market is very important in deciding my trade direction, and industry is also very important. If the industry is relatively strong and this industry scorecard shows relative strength, we can clearly see that on Friday, though the individual stocks I was looking at, they were down with high pressure, bearish pressure, but only this industry was relatively weak, interactive media and services. Therefore, I may go back to universe and choose only the interactive media and services and look that up using Q Finder. Okay, it's not found in Q Finder. Q Finder didn't have the stock. No problem. I can directly open it using Q Global. Of course, it is at a very low price point. There is no trade setup. That is how now you can navigate in different ways. Start with Q Vital fundamental analysis, then go to Q Finder or go to Q Charts or go to Q Edge. Of course, you could also start with Q Edge, carry out the top-down analysis from market charts. You could go to sectors, look at the strongest or weakest sectors, and then drill down into industries and stocks. Or you could start with Q Finder, look at Friday's signals and open them with charts. Many different possibilities are there now. I'm sure you will love to have fun with these new enhancements. I will try to release them soon after a bit more testing. As far as market is concerned, I am looking for shorting opportunities now. However, there are trendline supports for many mega cap stocks. So if I have short positions or take new short positions, I'll be mindful to book profit in them quickly. We are at the 1 hour point. Let me end today's session here. Thanks a lot for attending. I look forward to seeing you in our next session. That will be Wednesday, 8 p.m. Why 8 p.m.? It's my evening time, but Wednesday, 8 a.m. Eastern Standard Time, New York time, 8 a.m. Thanks a lot. Have a great weekend. Keep safe and trade profitably. See you again. Bye.